We've had a crazy sell-off in many stocks over the last few weeks, but especially today, it's getting a little bit ridiculous. Many amazing stocks like Microsoft is down 16% year to date. Amazon is down 30%. S&P Global, the stocks that everyone was dying to buy and people believe they will never go down, is trading at 20 times earnings, down 23% year to date. Yet many investors are upset. Why are investors upset? Because their stocks are down 10, 15, 20% and the S&P is up. So they believe there's something wrong, they believe they're doing something, and they're losing confidence in general. And this is why I'm making this video, even though I know it's not going to get a lot of views, but hopefully it could help one or two people try to navigate through this market. And I believe you're going to find it very helpful and you're going to know what kind of sectors or what kind of stocks we should really be buying at current levels. But there are three things that you have to understand. The first thing that you have to understand is that the market always recovers. When the market goes down, we believe we will never get back to break even, it will never recover. The market always recovers. We had the 1929 depression, stocks went down like 80%. We recovered. We had two world wars. We had the 2000 event, 2008 financial crisis. We had COVID. We had the tariff crash in 2025, 2022 bear market. And the market has always recovered. Maybe not just the market, but also great companies with great fundamentals. If you own them, if the fundamentals are still the same, if you didn't overpay for them, you are highly likely to recover on those stocks and do amazingly well. So it's very important to keep this confidence and to have the confidence that the market always recovers, and especially during sell-offs, as a lot of investors lose confidence and they believe the market will take 10 to 20 years to recover, or it could pretty much never recover. The market always recovers, okay? The second thing you have to understand is the cycle of markets emotion. The market cycle, which is mainly a new bull market, you could say, it starts with optimism around something, around a certain theme. Could be AI, could be EVs, could be anything. And if you can identify those themes, by the way, you could make a lot of money, and I'm going to talk about some of them. But it starts around optimism. Then it reaches peak euphoria. Peak euphoria is whenever you open your portfolio every day, you're happy, you're excited, you don't even want the market to close. We just want the market open all the time, which is what happened recently because you're making a lot of money, stocks are going up, your friends are making money with trashy, terrible quantum stocks, which are down 70% or whatever. So it's just easy to make money. You buy any stock and you make money. And you decide maybe you want to use leverage or whatever. This is peak euphoria. No one wants to take profits. No one wants cash. When I talk about cash on YouTube, people tell me it's a cost of inflation or timing the market. This is peak euphoria, okay? Peak capitulation is whenever you don't want to look at your portfolio. You're down a lot year to date. You're doubtful. You're scared to buy stocks because you believe they could go lower. This is a different mindset than euphoria. Euphoria is you're buying it, you believe you're not buying enough because the stock could move before you even buy it. It's the difference between the sell-offs. You're buying the stock, and you're like, oh, I'm buying the company. I believe it's undervalued, but maybe it could go lower, so I'm not sure if I should wait or what I should do. This is when we have some kind of panic and we're getting close to capitulation. Maybe it's not capitulation, but we'll start to get to a level where it's a good time to be buying. Now, the reason why the best time to buy is when it's not easy to buy is because most investors aren't buying. Maybe they're even selling at those prices. They're capitulating. They're moving to index funds. There's nothing wrong with that. But you generally have less and less buyers. You have a lot of buyers at euphoria. You don't have many buyers at capitulation because there's a lot of pain. People are painful. They look at their returns. They just can't do it. But you have to know that there's no pain, there's no gain. Sometimes you have to take the pain and you have to do what's difficult. Normally, the best kind of sell-offs, the best kind of opportunities, they come from doing something difficult, not just in investing in life in general. It doesn't come from doing something that's easy, that everyone can do. So the best kind of bargains, they come in whenever it's just hard to buy, whenever you're scared it could go lower. This is the best time to be buying them. So now you know that the market always recovers, okay? You also know that the best time to be buying is when it's not easy to buy. And the last thing you should know is about sector rotation. So the reason why the S&P is doing so well is because the money is coming out of tech and is going into Verizon, which I have some options on, into energy stocks, into many different sectors, and it's coming out of tech. Okay. Now, people believe that those tech stocks, again, will never recover and their stocks are down so much. But the money is going to come back in the tech stock and it's going to come out of Coca-Cola. Coca-Cola is not going to get to 200 PE. Verizon is not going to yield a 1% dividend. The money is eventually going to come out of those stocks and it's going to be going into the hated sectors, such as the tech stocks and other kind of stocks. And the best thing to do in the market is what I would call buy what people hate and sell them when they love them. So last year, big tech was pretty much near its euphoric cycle. You remember seeing videos from popular YouTubers saying why big tech always wins and why big tech is the best companies ever. Yet Microsoft's down 20% and we're upset to buy it 20% lower. That doesn't make any sense to me. But the euphoria, pretty much, this is where big tech was. Last year, the energy stocks, they were pretty much near capitulation. No one wanted the energy stocks. People believed oil is going to zero. And I talked about the energy stocks in my videos, and my energy stock is up 40%. Now, right now, I'm not buying what people love. I'm not buying Verizon. I'm not buying Coca-Cola. I'm not buying the energy stocks. In fact, I'm going to be trimming my energy stock and I'm going to be adding to the hated sectors, growth companies in general, and mainly big tech. And to me, it's just funny that people are actually upset. They're upset that they own Microsoft and it's down 25-30%. But if you have any kind of a cash position, you should be happy. You should be excited. People were dying to buy SPGI at 20 times earnings, close to 19 times right now. But now people are upset because it's trading 22% lower. If you want to buy a new car, okay, would you be upset if this new car is at 20 or 30% discount? It doesn't make any sense. But this is the kind of environment that we have right now. So now you know that the market always recovers. You know that the best time to buy is when it's not easy to buy. Now is not really an easy time to buy, in my opinion. There's no pain, no gain. And you also know that the market is rotating from sectors into other sectors. And I'm going to talk about some kind of sectors that I'm personally looking at such prices. One of them is the drones. I think the drone-related stocks, they were very hot this year. Now they're not as hot anymore. A lot of them are going down. I have some of them on my price target, on my watch list, I would call it. And I'm very interested in buying them. You could research them again on, ChatGPT or whatever. I always talk about that. The second one is the automation-related stocks. I talked about the Ouster stock. It's a really good bet on Fiscal.AI. And Fiscal.AI in general, I think is going to be the next big team. But no one cares about that right now. Why? Because stocks are going down, because it's painful, because they're down year to date. Instead of looking how they can maximize the recovery, they're pretty much looking when is the pain going to end. For me, I want the pain to go on forever. I want another 20-30% pullback. I don't care because I know what I want to buy and I know that the market always recovers. Another sector that I'm looking at is fintech, which I own SoFi and Robinhood. They've been getting killed. I've been buying the dips. A lot of people were dying to buy Robinhood. It was the leader of the bull market. It was in 2025. It's the future of finance. Now, at close to 27 times earnings, growing earnings 50-60%, not many people are excited about Robinhood. Another one is the battery stocks, which I talked about it before, but they never hit my fair value. They're getting a little bit closer. And again, you could research them on ChatGPT, do your own research and look into them. But I'm also buying a lot of the big tech stocks, Microsoft, potentially Amazon. I'm going to buy a little bit more. Meta, I bought the dip. I haven't owned big tech. I only had one last year. Now I have 3 big tech stocks and I'm buying them like never before because I believe the sell-off is not going to last too long. I think people will look back at such events and they will say, those big tech companies are amazing. They're going to be amazing when they go up. Now no one wants them. But this is, again, why there's such an amazing opportunity, because most investors are so carried away by the year-to-date return and they're not really looking at how they can maximize opportunities. And I know some of you maybe don't have the cash to be doing that, but that's okay. And that's how we learn lessons. And maybe for next time, you're going to be maybe taking a little bit of profits when certain stocks are expensive. You're going to be, maybe a little bit more careful. And that's again, how we learn. This is what investing is about: learning, making some mistakes, making more money than you lose. It's not about never losing money, never being wrong. And maybe, again, it's not going to get a lot of views, but maybe it's going to help some of you. And if it did help you out, if you did find some value, all I'm asking is please press the like button. Maybe consider subscribing. So I'll talk to you in another video.